Welcome to The Business That Pays with Adam Tolliver from Artisan Financial Strategies, where we mind the business that pays you. In this podcast, we empower successful families and business owners to make informed decisions about their finances through courageous conversations. Through his expertise as a practicing investment advisor representative with Eagle Strategies, LLC, a registered investment advisor, Adam teaches you how to create a wealth ecosystem by combining a practical technical framework with your personal, family, and community values. Join us for this journey where Adam normalizes sustainable wealth building and gives you the keys to make courageous, proactive financial decisions.
Your primary investment goal may be accumulation of wealth, but that's only part of comprehensive financial planning. I'm Patrice Sikora with your host, Adam Tolliver, who believes your financial plan is more than just portfolio returns. Adam, talk to me about your strategy of holistic planning.
Thank you for that intro, Patrice. And holistic planning is really one of those industry buzzwords, potentially. But I think it's a really, really important idea to understand. And coming off of our last episode, where we talked about whether or not it makes sense to go it alone on your journey in financial planning or to work with a professional, holistic planning is one of the reasons, because holistic planning is about accounting for all of the moving pieces in your financial world and really in your life that may not seem financial at first glance, but have an impact on your well-being, your family's well-being, and the goals and the life that you want to live. So holistic planning is just really critical. And sometimes you'll hear people describe it as comprehensive planning, but financial planning really does go beyond how much of a return are we getting in the market this quarter, this month, this year, et cetera.
So this basically goes beyond the traditional investment-centric planning where, accumulation is everything.
Exactly. And I like to look at it from a process standpoint, and then what are the components are being considered. And, from a financial planning process standpoint, what I like to stress with clients is every process is going to be fairly similar if it's grounded in fundamentals. I am a certified financial planner practitioner, and there's a very clear 7-step financial planning process that is given to us by the CFP board that we learn on, study on, and it's very thorough. And I like that process. What clashes with any process is people's real life, right? Mm-hmm. So the context of people's everyday life, when it clashes with the planning process, is what makes this industry and people's experience with financial planning so rich and unique. But in doing so, we're not just talking about investment planning. We're talking about risk management and insurance planning. We're talking about retirement planning and the difference between retirement planning and retirement income planning. We're talking about education planning, estate planning, tax planning, all of these sort of core planning areas that are somewhat universal for everyone, but through different phases of your life, you may interact with differently and you may have to pay a little more attention to. And then after we overlay the planning process and the core planning areas, we also have personal context and sort of the contextual variables that make up your life. So your family status. Are you a small family? Are you a large family? Are you a young and growing family? Are you a mature and transitioning family? Are you a blended family? What's your income level? How old are you and your spouse? Are you single? What's your net worth? What are other unique circumstances? Like, are there, maybe there's someone in your family who has special needs. Maybe there's someone in your family who may be dependent longer than what the quote unquote norm will be. So all of these sort of contextual variables bring even more layers. So you see, when we continue to talk more and more about a comprehensive or a holistic financial plan, the variables get a lot more complex and deeper than how much return we got in our portfolio.
Oh, they definitely do. What do you just say to someone who says, look, that doesn't have anything to do with my finances. I just want to make as much money over here as I can. I don't have to integrate everything else. They're totally separate.
Yeah, that's a great question. And integrating these other aspects of your life into your financial plan is really critical to actually enable you to be able to grow your portfolio. So most people, if you really pin them down and you have a conversation with them about what their goals are, what their objectives are. We've talked about this before, Patrice, but money is really a tool that enables your life, right? It enables a lot of the things that you want to do or accomplish or experience with your life. And if you pin people down and ask them, most people don't want to accumulate wealth just for the sake of accumulating wealth. There's usually something underlying that motivates that.
Definitely.
And when we integrate these different areas of planning, what we're talking about is further enabling your ability to actually accumulate and move your resources through time, through your life, through generations unencumbered. So the goal is not just to grow your money, but how do we protect your ability to continue to grow your money? And most importantly, make sure that you and the people you love have access to the resources you need when you need them. And that becomes a lot more complex than just growing it.
Talk to me more about how, when you have disconnected strategies, you miss things. There are inefficiencies.
Yeah, absolutely. Some examples of that will have to do a lot with tax planning, for example. And of course, tax planning and paying taxes can be a boogeyman for a lot of people. But when we get into an investment plan that does not account for tax efficiency, when we get into an investment plan that does not account for estate planning and how the assets you are investing will pass or won't pass to the people that you care about, making sure that people get what they need or what you want for them to have in a timely fashion, in an orderly fashion. If we're just focused on growing money and we don't consider those other areas, there's going to be a problem. And in investment planning, we think a lot about risk tolerance and asset allocation. So people talk about asset allocation a lot. But another thing that we're seeing advisors talk to clients about a lot more is asset location. So not just how our money is diversified, but where are we keeping it? What type of products, vehicles are they in? How is the accessibility? How does it transfer? Do we have beneficiaries on these accounts? Are they transferable based on title? Are they transferable based on beneficiary, or are they held in trust? All of these are multiple layers of financial planning that will cross paths. And if we don't have a comprehensive plan, we're just growing, growing, growing. We could have some familial and some life implications that we don't intend to have.
You just mentioned asset allocation and asset location. How about asset protection?
Yes, absolutely. So, asset protection is an area of planning that is near and dear to my heart. And in general, risk management, insurance planning, we believe in protection first. And we talk about protecting people, protecting incomes, protecting families, protecting assets. And asset protection has a lot to do with threats internal and external. So when we are thinking about, God forbid, something happen in the way of an illness or someone passing away or someone being sued, how do we structure your assets in a way that can keep them away from sort of sometimes are called the parade of horribles. So we're we're thinking about debtors, we're thinking about divorce, we're thinking about litigation, all sorts of things that could threaten what you've built, right? So if we're just focused on grow, 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 and our assets are in a place that are actually vulnerable in the event that someone were to come after us or something, life were to happen in a way that life tends to do, right? There are just certain risks that are inherent in existing. We could leave ourselves vulnerable, and ultimately, what we've been building could be susceptible to predators and circumstance, and that's never what we want.
In terms of long-term benefits, Adam, what about stability? Market fluctuations have been with us almost on a daily or monthly basis for the last couple of years.
Absolutely, and one of our primary responsibilities as an advisor and in our practice is to manage the emotions and expectations and behaviors of our clients to be accountability there in those fluctuating times. But also, if you've got a central financial plan and your investment strategy is based on sort of a goals based approach. So we're not just growing to grow, but maybe we've got certain money that's earmarked for certain times in our lives or certain purposes in our lives. Investors are much more likely to abandon an investment strategy when they understand the underlying purpose and relevance. And that underlying purpose and relevance is much easier to track when there's a central plan in place, a plan that is multifaceted, integrated with all of the core planning areas. We are much less likely to deviate and sort of panic and make decisions that we might later regret because of a temporary fluctuation in market.
Got it. Do you constantly have to monitor and watch what you've got there and all the integration you've done? Because some pieces will change and others won't.
Yes. And that's a huge part of planning. A couple of things that we always want to remind people of is that there is no perfect plan because life is not perfect. There's no complete plan, right? So, like, we can go through a planning process, we can go through an engagement, and we can lay the foundation for a plan. But if we just set it on the shelf and we don't adhere to it, or even if we adhere to it and set it on the shelf, but we look up in 5 years and we haven't revisited, we haven't done any monitoring, we haven't done any updates, your life may look completely different now.
Right.
Your
Right.
facts are going to be completely different now than they were when we initially did your plan. And so it is really imperative that you have some sort of regular cadence of ongoing monitoring to continue to plan, continue to iterate, continue to make adjustments and changes as necessary. I think we've talked about this in previous episodes too, but one of the dangers of planning in ways that is not frequent enough is a potential accidental beneficiary, which
Oh,
those are two words you never want to hear in the same sentence, right?
yes.
And so, regular updates, regular cadence to make sure that what you have and what you're doing is still relevant to your situation and still best for you. And, we talked earlier about those contextual variables. Those contextual variables are always shifting. And sometimes that's internal in our families, in our personal lives, in our careers. And then sometimes it's external. It's market factors, it's economy, it's the political landscape, laws and rules around how we hold and keep and move our money, from one person to another, from family members to institutions. All of those things can impact our financial plan. So we always want to be mindful of that.
Mm-hmm. It sounds almost like a Rubik's Cube of life.
That's a great way to put it.
All right. Well, then let's move on to how do you measure this? How do you make sure that we're getting results, positive results? So, well, let me put it this way: we're getting the results we want.
Yes, that's a wonderful question. And we are constantly balancing as financial planners the quantitative versus the qualitative. So, quantitative is fairly straightforward, right? We're talking numbers, facts, figures.
Mm-hmm.
Hey, we have this much in this account. We will need it on this date. Hopefully, it is earning X percentage. And when we receive it, we will receive it in this way, right? But some things are much more important, like what or who this is for. What is the purpose of this money? How am I using it to enrich my life? How am I using it to support my family? How am I using it to protect my family? Those are the types of things where we get to talking about family values, family priorities, individual values and priorities, and how they mesh together. How are we protecting family harmony? Um, those are some of the richer estate planning questions and discussions that we get into, just about, hey, I'd love to be able to leave something to my family. I've got multiple kids at different stages in life. How do I make sure that my family isn't fighting over what's left behind? If this is something that I want to do to support them, enrich them, I've worked all my life, it's important to me, but how do I do it in a way that is responsible and loving and caring? And how do I communicate to them what my desires are? Those are much more qualitative questions and require some collaboration and some thought and ongoing consideration, because as we just mentioned, things do change over time. So we always want to make sure that those are relevant. And the best way to do that is if we are sticking to a regular routine of planning and continuing to be mindful and thoughtful.
Do you find it hard to explain to new clients the importance of a holistic approach?
Fortunately, I think the majority of new clients we speak to are very receptive to it. And ironically enough, the majority of new clients we meet have been experiencing sort of investment first and only planning relationships.
Oh.
So, and I liken it to if you are someone who is working with a financial advisor or a wealth manager, what you don't want is someone who treats your money like the client. You are the client, right? And so we have this analogy of, some advisors work below the belt. They're worried about your wallet, and then a true advisor is really worried about your heart and your mind. And how do we use your financial facts, the financial tools and resources at your disposal to support a healthy life, a good life for you and the people you care about. And when we convey it to clients that way, there's almost a sense of relief that we can sense, because they've had the experience of, we're just kind of passively reactionary, like if something happens, we're ready to handle it. That's what they've experienced. But it's not sort of a well-rounded approach to their life and their money, and making sure that the two are working well together throughout time.
Okay. Well done. Well said, I should say. Is there anything we've not mentioned yet that you want to make sure we do?
I don't think so.
Okay. Well then, Adam, how can listeners reach you to talk more about holistic financial planning?
You can reach me at workingwithadam.com.
Adam, thank you so much. And listeners, there is more where this came from. And all you have to do is follow the podcast to know when a new show is ready for you. We also ask that you share this with friends and family. And thanks for being with us.
Thank you for listening to Business That Pays. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of the Artisan Financial Strategies or Eagle Strategies, LLC, a registered investment advisor. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial professional provider with any questions you may have regarding your investment strategies.
Adam Tolliver, registered representative offering securities through New York Life Securities, LLC, member FINRA SIPC, a licensed insurance agency. 1125 Cambridge Square, Suite C, Alpharetta, Georgia, 30009, 404-210-9311. Financial advisor offering investment advisory services through Eagle Strategies, LLC, a registered investment advisor. New York Life Securities, LLC, and Eagle Strategies, LLC are New York Life companies. Artisan Financial Strategies, LLC, is not owned or operated by New York Life Securities, LLC, or its affiliates. Neither Artisan Financial Strategies, LLC, nor its advisors provide tax, legal, or accounting advice.